What if I told you that for less than the price of a fancy dinner you could buy into two incredibly promising companies poised for massive growth? It sounds almost too good to be true, right? Well, in today's market, hidden gems are everywhere if you know where to look. We're talking about companies that are trading for pennies on the dollar compared to their intrinsic value, offering a rare opportunity to get in on the ground floor before the rest of the market catches on. These aren't just random penny stocks. These are established players in their respective fields, just waiting for the right catalyst to send their stock prices soaring. Today, I'm pulling back the curtain on two such companies. One is a titan in the real estate world, a leader in retail and mixed-use property development that's currently flying under the radar despite its rock-solid fundamentals and juicy dividend yield. The other is a trailblazer in the explosive world of digital assets, a pioneer in blockchain technology and cryptocurrency mining that's strategically positioned to capitalize on the next wave of digital innovation. These are two completely different businesses, but they share one crucial trait. They are both dirt cheap and packed with upside potential. This isn't just another stock-picking video. This is a deep dive into undervalued assets that could realistically supercharge your portfolio, even with a small investment. We're going to break down their financials, their strategic advantages, and exactly why I believe they are screaming buys right now. If you only watch one video today, make sure you watch this one all the way till the end. You're not going to want to miss the details on these two potential multi-baggers. Hit the like button, let's get 1,000 likes on this one, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. First up, we have RioCan REIT, ticker symbol RIOCF. This is a giant in Canadian real estate with a focus on retail and mixed-use properties. Let's break down why this stock is dirt cheap right now and what makes it a compelling buy for value investors. Now I know what some of you might be thinking, retail real estate in this economy? And that's exactly why this opportunity exists. The market has been overly pessimistic about retail, and that has created a massive dislocation between RioCan's stock price and the actual value of its assets. RioCan isn't just any retail landlord. They are one of Canada's largest and most trusted real estate investment trusts, with a history stretching back to 1993. They own, manage and develop a portfolio of high-quality, transit-oriented properties in Canada's major urban markets. Think about it. These are prime locations that are essential to daily life. We're talking about shopping centers anchored by grocery stores, pharmacies, and other essential services that people need, regardless of what the economy is doing. This isn't discretionary retail. This is necessity-based retail, which provides a very stable and predictable cash flow stream. The company has been strategically evolving its portfolio. They've been shedding their secondary market assets and doubling down on their prime urban locations in cities like Toronto, Ottawa, and Calgary. This strategic shift is crucial. They are focusing on irreplaceable real estate that will always be in high demand. Furthermore, they are heavily invested in mixed-use developments, which they call RioCan Living. This involves building residential rental towers on top of or adjacent to their existing retail centers. This is a genius move that creates vibrant 24/7 communities and unlocks immense value from their land. Let's talk numbers because that's where the story gets really compelling. RioCan stock is currently trading at a significant discount to its net asset value, or NAV. The NAV is essentially what the company's properties would be worth if they were sold today. So when you buy the stock, you are literally buying their high-quality real estate for less than it's worth. It's like finding a house on sale for 20% off its appraised value. This provides a substantial margin of safety for investors, which is a key principle of value investing. On top of that, RioCan pays a very attractive monthly dividend. For income-focused investors, this is a huge plus. You get paid to wait for the market to recognize the true value of the company. The dividend yield is currently sitting at 4.16%, providing a steady stream of passive income that can be reinvested to compound your returns over time. RioCan REIT currently carries a market cap of $3.86 billion, with earnings per share of 95 cents and a price-to-earnings ratio of 19. In 2024, the company generated $1.29 billion in revenue and a net income of $473.46 million. At a current share price of $13.04, the stock trades nearly 30% below its fair value estimate of $16.92. Recently, RioCan announced a distribution of 9.65 cents per unit for August, payable on September 8, 2025. This move continues the trust's long-standing commitment to delivering consistent income to unit holders. Financial performance has also been strong, with second quarter 2025 results showing a 9.3% increase in funds from operations per unit, climbing to 47 cents. Leasing activity was particularly robust, with spreads on new leases hitting an impressive 51.5%, signaling healthy demand for RioCan's properties. The trust has also been actively reshaping its portfolio. The sale of 4 additional RioCan living assets reflects a strategic focus on capital recycling, ensuring greater efficiency and value generation for the future. On top of this, RioCan's annual dividend of 75 cents per unit underscores its dedication to rewarding investors. Overall, despite a slight decline in share price in recent months, RioCan's mix of solid operations, disciplined asset management, and reliable distributions positions it strongly for long-term growth. The company has a solid track record of paying dividends, and with their strong occupancy rates and stable cash flows, that dividend looks very secure. Occupancy is another key metric to look at for a REIT, and RioCan shines here. Their portfolio boasts an impressive occupancy rate, consistently hovering in the high 90s. This demonstrates the high quality and desirability of their locations. Even during the toughest economic times, their tenants, which include major national brands like Loblaws, Canadian Tire, and Shoppers Drug Mart, have continued to pay rent. This tenant base is incredibly strong and diversified, reducing the risk associated with any single tenant or industry. The growth driver here is RioCan Living. They have a massive development pipeline of residential units. As these projects are completed and leased up, they will provide a significant boost to the company's net operating income and cash flow. This isn't just a hypothetical growth story. It's happening right now. They are creating value from the ground up by intensifying the use of their existing land, a strategy that is both smart and highly profitable. The market, in my opinion, is not fully pricing in the long-term value of this residential development pipeline. So, to recap on RioCan, you have a best-in-class operator in a stable segment of the real estate market. You have a stock trading at a deep discount to its underlying asset value. You get a juicy, reliable monthly dividend, and you have a clear, tangible growth runway through their residential development program. The pessimism surrounding retail real estate has created a golden opportunity for long-term investors to pick up this high-quality company for a bargain price. This is exactly the kind of undervalued, high-yield play that can anchor a portfolio and generate substantial returns over time. Next, let's talk about Hive Blockchain Technologies, ticker symbol Hive. This company is a pioneer in the blockchain and cryptocurrency mining space with a unique position in the digital asset sector. Here's why Hive could be a smart, albeit more speculative, addition to your portfolio. Now, before we dive in, it's important to understand that the crypto space is volatile, but with high risk can come high reward, and Hive has a strategy that sets it apart from many of its competitors. Hive was one of the first publicly traded crypto miners, giving it a first-mover advantage and a level of transparency that you don't always find in this industry. They are not just mining Bitcoin. While Bitcoin is a core part of their operations, they have a diversified mining strategy that has included other digital assets. This diversification can help insulate them from the price swings of a single cryptocurrency, which is a very prudent approach in such a dynamic market. What really makes Hive interesting is its focus on green energy. They have strategically located their data centers in places with access to cheap, clean, and renewable energy sources, like Canada, Sweden, and Iceland. This is a massive competitive advantage. First, it keeps their operating costs low, as electricity is the single biggest expense for a crypto miner. Lower costs mean higher profit margins. Second, it makes them an ESG-friendly investment, which is becoming increasingly important for institutional investors. As the world focuses more on sustainability, Hive is already ahead of the curve. Let's look at their balance sheet, which is another area of strength. Hive has a policy of holding on to the coins it mines, a strategy often referred to as hodling. This means that as the value of Bitcoin and other digital assets increases, the value of Hive's treasury also increases. They have accumulated a substantial stash of digital assets, which acts as a store of value and provides a direct upside to the appreciation of the crypto market. This is a powerful lever for growth that is directly tied to the very assets they are creating. The valuation of Hive stock is where things get really intriguing. Like many crypto-related stocks, its price is highly correlated with the price of Bitcoin. However, the stock often trades at a discount to the value of the digital assets it holds on its balance sheet, plus the value of its mining infrastructure. This means you can sometimes buy shares of Hive for less than the value of its underlying assets. It's a way to get exposure to the crypto market with the potential for the stock's valuation gap to close, providing an extra layer of potential return. Furthermore, Hive is not just a mining company. They are positioning themselves as a broader technology company with a focus on the data center infrastructure that will power the future of Web3 and artificial intelligence. They have a fleet of high-performance GPUs that were previously used for mining other coins, which can be repurposed for high-performance computing and AI applications. This is a brilliant strategic pivot that opens up new, high-margin revenue streams and diversifies their business beyond just crypto mining. Think about the explosion in demand for AI and cloud computing. Companies need massive amounts of processing power, and Hive has the infrastructure to provide it. This creates a fascinating dual-play opportunity. When crypto mining is highly profitable, they can focus their resources there. When the AI and high-performance computing markets are booming, they can pivot their GPU fleet to capture that demand. This flexibility gives them a significant edge and makes their business model much more resilient than a pure-play crypto miner. The company holds a market cap of $362.86 million, with 2024 revenue of $115.28 million. However, net income for the same period came in at a slight loss of $3 million. On August 19, 2025, Hive announced a major partnership through its subsidiary Buzz HPC with Bell Canada. This collaboration will strengthen its sovereign AI infrastructure offering, leveraging advanced NVIDIA technology to expand in the fast-growing artificial intelligence sector. Financially, the company posted record revenues in the first quarter of 2026, reaching $45.6 million. That growth was fueled by higher Bitcoin mining output and strong performance from high-performance computing services, representing a 45% sequential increase in average mining capacity to 8.9 exahashes per second. Hive has also been aggressive in expanding its Bitcoin mining operations, recently surpassing 14 exahashes per second and targeting 25 exahashes by Thanksgiving. This ambitious goal highlights significant growth potential. Still, investors should remain mindful of ongoing financial challenges and the inherent volatility of both the cryptocurrency and AI markets. The combination of strong partnerships, record growth, and operational momentum creates a compelling but complex investment story for Hive moving forward. So, with Hive, you are investing in a company with a strong, diversified mining operation powered by low-cost green energy. You have a company with a robust balance sheet and a significant treasury of digital assets. You have a stock that often trades at a discount to its intrinsic value. And most importantly, you have a forward-thinking management team that is already expanding into the high-growth markets of AI and high-performance computing. While it carries more risk than a stable REIT like RioCan, the upside potential for Hive is enormous, especially for investors who are bullish on the long-term future of blockchain technology and artificial intelligence. So there you have it, two completely different companies, both trading at dirt-cheap prices, offering incredible value for investors with just a couple $100s to start. On one hand, you have RioCan, a stable, high-yield real estate giant providing a margin of safety and consistent income. On the other, you have Hive Blockchain, a high-growth, speculative play on the future of digital assets and AI. Both offer a compelling thesis for why they could deliver significant returns from their current levels. These are the kinds of opportunities that can truly move the needle in your portfolio. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. Trust me, your future self will thank you. And for those who want even more, if you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now, for today's question, which of these two stocks do you think has the most upside potential in 2024, the stable real estate play with RioCan or the high-growth tech play with Hive? Let me know your thoughts in the comments below. Don't forget to share your thoughts in the comments, and subscribe to the YouTube channel so you don't miss out on the next important financial investing update. Thanks for watching, and I'll see you in the next one.